So I'm the worst scheduler around. And like,
No.
I just figured out the calendar over the last 2 years, really. I used to
Like
just
the calendar, like
like
in general.
a mobile phone calendar.
Oh.
And yeah, I just had it
Oh,
like with you. I'm always having conflict. I just had a big family conflict that I booked a trip to Orlando that I forgot about.
I would say that you still don't have the hang of it.
Same story.
It's
Same
just the
story
way
over
it
here, Daryl,
works.
at the Butler House.
It's just the way
How
it
was your trip
works.
though? You were away?
Oh, so nice. Niagara and Niagara on the Lake.
Mm-hmm.
Niagara on
Mm-hmm.
the Lake is like a time warp.
It's a time warp.
It's like a different
Which time
country, a
though?
different planet. A
Mm,
good time. A good
good time.
time. Oh
Yeah.
my God. A good time for all, TK.
It is a unique here little like European destination inside Ontario.
Well, and like every other small town, kind of downtown little strip, there's real estate offices all over the place.
Yeah.
And I'm looking in the window and I'm like, God damn it. What the hell? Who's paying these prices in Niagara on the Lake? I mean, it's beautiful, but
Not for long, Daryl. Not for long. Market's
oh,
changing.
nobody came here
Wide
for good news today.
widespread
Uh,
changes all over the board. We got to get our
it's
buddy Santo
nasty.
back on the show again because he's got
No, he
great stats.
scares me. He's
I know,
scaring
but he's
me.
got the numbers. He's got the week by week
Oh,
numbers, and I like watching his channel.
I love it. I love it.
But definitely some real heavy changes, and the people who are understanding the market right now are winning. They're winning.
Who the hell understands the market? TK, do you understand the market?
I
Are
understand
you
the market.
what's
I
going
know. I
on? Tell
understand
me.
there's a lot of buyers out there. There's people still looking to buy. There's people who want to buy, who need a home to live, who are, if they don't buy, they're going to go into a situation that's tough. I know the rental market's insane and people don't want to fork out
Insane.
5-6 grand for a rental when they can go and buy a property and just feel comfortable. Whether the market goes up or down in the next 12 months is not a priority for them.
Aren't
They don't want to
aren't
move again.
aren't most people in the opposite of that? Like, aren't most people going like, I can't afford a house, I have to go into the rental market? Isn't
But
that
but the
what's going
option,
on?
so generally speaking, but the option of, well, you know what, maybe I'll wait for this market to cool down. I'll just go and rent a place, right? Which I got a
Mm.
client who's doing that. And we're looking at the rental prices and it's like, whoa. So, that's the decision that the buyer gets to make, right? But it doesn't help when you thought you could get a place for 4,000 and it's 5,500 or 6 grand.
So the option to like move further is not really like people would rather wait and see what happens where they want to live now than go to Saskatchewan, for example,
On
or maybe
honestly,
even
like
Newmarket.
all the noise about the market and interest rates and everything like that is exactly that. It's all noise. Okay.
Noise.
The only people that I'm meeting that are really doing things properly and that actually are successful in buying and selling is they have a genuine need to buy. They're like, I need a house to live in and I want to get, my own
Right.
property, my first property. I want to get a bigger property. And guess what? They go and buy something. The people who
But
want to
that's the
sell, they're like,
same for the sellers. They need to sell too,
well, they
right?
have
So
a
it's
need to sell. They're moving out of the country. I met someone the other day moving out of the country. They bought already. They are retiring. They are, a couple of different scenarios. I got dealing with a lot of builders and people like that right now.
can't afford
Ret-
like the new
ret- ret-
mortgage, maybe, no?
retiring from the money is, I think, the big people that I'm dealing with right now. They need that money. They want to
Boomers.
take that money out. Yep, they want
They
to take
got
that money
killed in the
out,
stock market. They got to get
and they
something
just want to
somewhere.
know that they have it and not worry about it because they're happy with the way that the market is today, which is not as good as it was yesterday. But the question is will
Is it better
tomorrow
than
be
tomorrow?
worse?
Oh, come on, dude. It's going to be so much worse tomorrow.
Seems like that for
It
sure.
is going to be tomorrow is certain.
Does
Okay.
tomorrow ever come though? That's the problem. Does tomorrow ever come?
Tomorrow never knows.
Yeah. Does tomorrow ever come? So
Well, I think so. I'm hoping so for me,
mm,
anyways. I don't know about you.
Yeah, for me, it doesn't matter. Like I'm not here to tell you that the market goes up or down and that's good or bad for me. At the end of the day, buyers are going to buy, sellers are going to sell.
Buyers are gonna
I'm
buy.
a buyer. If there's a good deal out there, I'll buy.
There-
I'm not a seller, so I'm not worried about selling anything in this market. So
Well, so how bad is it right now for the people that need to sell?
it's
If all
bad.
the people are sitting there
Like
going like,
so Tom Story gave us a great analogy the other day, and I've used it. I got no shame in letting people know I'm learning from the big story team.
that's
The
right.
casino analogy, where you go in with 1,000, you win 1,000, then you lose 400. Are you up 600 or are you down 400?
Mhm.
Right? That's the situation everyone's in right now. Because year over year, everybody that I'm coming to right now, I can show them that their home is worth more today than it was a year ago.
A
Right?
year ago.
Yeah, and like
That's
everybody that
good.
I've gone to see, except for that guy I sent you this morning, but which we can't talk about, Daryl. No more
No,
discussing people's
no real
deals
deals.
on the podcast.
Mm, that's too bad.
My head is bobbling today with this background. And sorry, I lost my train of thought. The people that I'm dealing with they're all worth more than they were a year ago, right?
Yeah.
So, you have to look at that like half glass full type of perspective, which is I'm doing okay. And, I'm going to go to that next destination with more money than I would have a year ago. Because there's lots of people who cashed out a year ago. There's lots of people who cashed out 2 years ago.
Yeah, I
Right.
don't think anybody's so worried about the 1 year ago and the 2 year ago purchasers. I think it's the people that bought in February and maybe March that
Ooh, I got a deal for you then.
but not only that, people whose mortgages came due or are about to come due for renewal now. Those people are about to get a little smack in the
Yeah, but
face.
they bought long ago enough to have enough equity to feel
Yeah,
still
screw
wealthy enough
them.
to
You've
make the
got
decision, right?
enough. Take out a HELOC to
Look,
pay the
so
difference, you dick.
so I had a deal closed that I talked to you guys
That's
about
not fair.
an estate sale, and then the appraisal didn't come in. The owner, sorry, it wasn't an estate sale. It was a power of attorney sale, but then the owner passed away. And then it became an estate sale. And so we got, a probate, but we got the probate done the week before the original closing. And if
Wasn't
we
this a while
hadn't,
ago?
yeah, and if we hadn't, the buyer would have an option to basically back out of the deal. This was May 12th. And the appraisal came in $390,000 short.
Oh, hold on. Let's talk about appraisals, but let's bring in our guest first because she was having a little beef with appraisers on Twitter last time I checked.
Let's
Let's
talk
bring
about
her
it.
in.
Let's
Yeah.
talk to these appraisers.
Let's talk about
Let's
these
hang them to
appraisers
dry.
because I've got beef. This episode is brought to you by Landlord.
This landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer. Let's talk about these
hang 'em to
appraisers
dry.
because I've got beef. I keep trying to get somebody else into the conversation the way I want the conversation to go. Well, there she is. Hello. Can you hear us?
Welcome.
No,
She's
she's
connecting.
still
She's connecting to the
Yeah,
audio.
I
She
can
sees
see
her lips
that.
moving
So
and our
listen,
smiles.
can you hear us now?
And she's on mute.
No, we
We'll
can't.
get her off mute and we're back. All right.
Hi, guys.
Hi,
There
So
Donna.
nice to
she
see you.
is. Hello.
I feel like I could be your mother's or your mother.
Nice to
Okay.
meet you. No,
Yeah,
not a
Both of
chance.
us.
Not a chance. You're our guest.
He's
You're a
the
special
older
guest.
brother.
But yeah. Well, you know what? When I see you youngsters, it's like, wow, I remember. So
I wish.
Nothing wrong with that. We're happy to have you on the show.
Absolutely.
Donna, thanks for the schedule changing and everything else to organizing
Twice.
that. We are live on the show. We're recording. We're not going live, but we record the show and we post it later.
Okay.
So we're getting into things right away. But
Thank
Darryl
you
is an
for
active
joining
Twitter
us.
user, and I've seen your feed as well. And we think that you're a great guest for us today and all our listeners to hear what you have to say about the Canadian real estate market.
Great. Well, you pull mummy in, right? You pull the real estate mother in.
It's a great
So,
perspective.
uh,
You've been doing this for a long time, haven't you?
well, you know what is it's just like deja vu. It's like repeat of it's like, wow, we've been here before. Time to switch, it's time to switch gears, and then you move in this direction. And it's the market is what people really forget is that the real estate market is always changing. It changes, by different areas and demographics, and whether you're dealing with investors or with first-time home buyers, so it's always changing. And to put a microscope on it doesn't do anyone any good, right? Like, right now everyone is focused on real estate. So, that kind of robs people of living their life because they're just so focused on their real estate, which what
Too
do they
much? Do you
say?
think it's too much focus on real estate right now, Donna?
Oh, the market, it's one of those things where you just don't know where the buyers have gone. We've said it so many times. I can't even count the number of times I've said it over the years. You have this great listing, and where the heck are all the buyers? Like when I'm out showing, there seems to be like a lot of buyers. Okay, like I'm competing.
Yeah.
I get a really good listing, and it's like, okay, like where are the buyers? So it's not, there's various houses that come for sale. There's various agents that are showing it, showing these houses. So this is constantly changing, just constantly. And people really do have to kind of lay off of it. I know there's a lot of doom and gloom. And yeah, some people are going to get hurt really bad. Okay. Like some people, the feeds that I read, and, the people not closing transactions,
Yeah.
that's, I don't know how those are going to end up for a lot of
Darryl and
people.
I were just discussing right before. You want to touch on that now, Darryl, or no?
Well, yeah. I mean, I keep trying to get somebody into the ring with me on this, and you mentioned it on Twitter recently. Like, I really think that appraisers need to be kind of held liable for right. No, but isn't that the case? I mean, I get their motivation, right? But at some point, and I understand that what somebody is willing to pay dictates the market price. I mean, I get that that's how people view it, but like, shouldn't it be? I get that you paid $17 billion for that, but it was only worth 100 million, right? Or I get that you paid 1.7 million, but it was really only worth 1.6. So I can only appraise it at 1.6. Like, why didn't that happen ever along the way?
Well, and that's such an incredible point, Darryl, is because, you know, realtors, we're right down there, boots on the ground, selling these properties. We're not putting the mortgages on them. We're not, all we're doing is trying to look after the clients. That's the end of the story. And when if someone comes to me and they say their client has a mortgage commitment, that they're pre-approved, everything is good to go, the house is, all it needs to do is appraise for, $500,000. The appraiser goes through, and then 2 months later, the bank decides to send the appraiser through again. How is that even possible? How can something lose 20%? No, it didn't lose 20%. It's just there's not enough buyers on the, like, it will lose 20% if it has to sell for 20% less right then. Yeah, definitely. It becomes a hard loss.
On the way
Right?
down, they're super safe, but on the way up, it's like, what did they pay for it? Like,
Well, and there was, I had to go back through my Twitter feed because, I got hit several times over this, the whole list low and price discovery. And a lot of people would say, well, it's price discovery. And well, It's not price discovery. Okay, when you have people frantically, and it reminds me, that guy with the apple, right? Like, this is the apple, and everyone did you see that video? Just look up the guy
No.
selling the apple.
Okay.
And all these people are frantically bidding on this apple. And one guy comes out of the back and says, $100. And the guy says, $100? Like, where are you getting that? He says, I don't know. I just said it. Like I just, and so it created this perfect storm. The banks knew what was going on. They were competing with
Everybody.
each other for the mortgages.
And the mortgage brokers, everybody
And
knew
the
what was going
mortgage
on.
brokers. And it was like quick, fast, and actually it made my head spin. It was instrumental because, as you can see, I'm here. I don't have a business background in front of me because I'm segueing into retirement, but still very actively involved in real estate. But it was these past 2 years was something that just broke away from all fundamentals.
Yeah.
And how can you advise clients? I was telling investors, bring out your dead, okay? Like, bring out the crap, right? Let's get that on the market. Let's get it sold. And I just spoke to one a couple nights ago, and he was saying, wow, he said, I would never have thought to sell those 2 places. He said, I could never get that money for them now. And, that's where you're just trying to service your clients. I didn't have him out there buying anything, or any of my investors out there buying anything. It was, like, don't get into this. Whatever is happening, don't get into it. First time home buyers felt really, really bad for them. You had people who, they had received eviction notices from their house. They had to get into something. Like, that's a horrible position to be in. And to sit there and say,
cancels.
oh, the builder canceled. I had one townhouse, actually. The builder canceled the build, screwed the people over royally, right? They had like $350,000, the one that's in Caledonia. I don't know how familiar you are with our market, but it was an Indigenous dispute, and he ended up canceling the project. And by the time they received the notice that it had been canceled, prices had gone up 200. Like, there was no way they could buy.
Yeah.
So so the good news is the prices, are going to somehow work their way to where they should be. Like, it's going to swing one way and then swing the other, I think. But so I went back into my posts, and at the end of March, I said, it is so abnormal. Prices don't go up 30% a year. Like, they don't. And price and
Well,
houses,
they have before, but the same thing happens at the end every time.
That's it.
Yeah.
Let me ask you. I mean,
Mhm.
based on the discussion TK and I had previous to you joining us and everything you've said so far, I mean, it sounds like the system's pretty screwed up, right? And like, do you remember like, was it ever not screwed up?
Yeah.
Like, what's changed in the whole marketplace that allows that to kind of happen that didn't allow for it to happen before?
So CMHC, okay, when thinking back into the 80s and the 90s, and CMHC's involvement, CMHC used to send appraisers out to the properties. So they didn't have Emily kicking out the evaluations. The appraiser went in, and the appraiser could lower an appraisal just based on the neighbors' houses. If they didn't like the way that it was going in, or anything at all. So CMHC played a big role in mortgage and high ratio mortgage underwriting, okay, with their appraisals. Fast forward to a time when everything is automated, and there's mortgage brokers that can enter the address, and they come up with what's the name of their system. They have a system that like an evaluation system, and mortgage brokers are all on commission. Banks cut back mortgage people in the branches. They put them all on commission. You've got people just coming in like crazy to pump these appraisals, to pump these appraisals through. And appraisers, I get appraisal calls from people from north of Toronto coming into Hamilton to do an appraisal. Well, they have no idea what area of town they're in.
No, but
So
the
when,
lender wants them to use this guy, right?
yes,
Well,
yes.
he's on their list, so somehow he got it, and he's willing to drive to Hamilton, right? That's it.
Well,
And that's
Oh, and we know
unfortunate
he's willing
because
to write the right number too.
well, exactly. At the end of the day, like how much market knowledge could you have? And just like what Don was saying about, looking at the neighbors' houses, we get calls. They're just like, just send me a picture of the panel and the hot water tank.
Right.
And I walked by the house, so everything's good. And it's
Yeah,
like
on
okay.
Google Maps, I walked by the
Yeah,
house.
yeah.
Oh
well, there was
my
a
God.
famous one back in the 90s that when it got foreclosed on, and this is when the banks were doing, maybe when the first automations ones came out. I don't know exactly. It was in the 90s though. And the bank foreclosed. The house didn't even have windows. The appraiser appraised a house, never stepped foot near it. He would have seen that there were no windows.
You'd hope.
Yeah. So anyhow, that but those things are so short-lived. We seem to, when you take a look at the hierarchy coming down, the banks want to make their profit. They want the market share. So everyone's out there. They've got commission people working for them, and commission salespeople are selling these units. So, this is what happens. And for every house that sold for, $200,000 more than what I had on paper from clients, and I was doing like full CMAs, and my head would explode. It's like that will never appraise. And then,
And you're talking in Hamilton?
in Hamilton, Stony
200,000
Creek.
over in Hamilton. Yeah.
Oh,
Stony
well,
Creek.
like more than what I was able to, so, and you've seen, I'm really against, okay, the ability of realtors to list so far under market. I think it is so false and misleading, and it pulls in this wide range of people, creates this froth, all these bidding wars. Not that bidding wars wouldn't happen, not that there wouldn't be competition, but there's a big difference between 2 or 3 people wanting something and 50.
Yeah,
And
there's people who shouldn't be there, right? Who don't belong there, right? That's not a house that they can afford, but they
right.
are, maybe a little bit misled.
Yeah. And that agents are coming in from all over the place. Okay. So we had agents coming in from north of Toronto, coming into various markets, whether it be Hamilton, Woodstock, all over the place, and just using Toronto prices to purchase it.
The dumb Toronto money came in and pumped up the Hamilton market, like Barrie
Fed
and
up,
Bancroft and everywhere else,
Toronto
right?
money.
Yeah.
Woodstock,
Woodstock, all those
Ingersoll,
And so
you
now
had mentioned a couple times, about similarities to, 90s and stuff like that. And, I don't expect you to have this perfect recollection of every single event that happened 30 years ago, right? But what similarities are you picking up on, and what similarities or differences are you picking up on today's market compared to any previous markets that you remember from your career?
Well, I think every time the market shifts, it's a hybrid of previous markets, okay, or previous economic conditions, and what's going on globally. So in 1990, as you were too young to remember, but Ontario had just gotten its first NDP government, and the headlines came out from a lot of the business community: survive till 95. So there were actual headlines that says survive till 95. And, the NDP government cut projects in cities like Hamilton, the Red Hill Creek Expressway, that the funding for that was pulled. So there was all of this chaos. And whenever you get this disruption, this chaos, you're going to get uncertainty in the real estate market. And that's exactly what happened. So it was, I remember it well because I had just had our third child within a very short time period. But the market had slowed down in 87 somewhat. And then
Time to have babies. The market's dead. Time to have babies.
Well, yeah, the market slowed down in 87. There was a joke amongst my colleagues, okay, that every time I showed up pregnant, that the market tanked.
The
because
market was slow.
I married another realtor. Okay, so I
Mhm.
married my competitor. We were competitors, and we ended up getting married. And then
That's
that was
Business
just
advice here on the Canadian Real Estate Show,
That's
today,
right.
guys. All
What's
right.
that?
Business advice today on the Canadian Real Estate
Yeah,
Show
yeah.
for everyone
So
listening.
so the market was sputtering, right? And then that was the catalyst that just kind of like wiped it. And then what happens is you get all these people in the crosshairs, just like what we're seeing now. I think this is indicative of every single disruption in the market. The people, oh my gosh, I'm not going to close. I just lost like $200,000. And it starts this chain reaction. And that doesn't get corrected in a month or 2 months or 5 months. You know, this whole thing is going to be working out for a long time. And just like we saw in 2017, we saw in 1990, we saw, and I saw when I worked at the bank in 1980. So it's always seems to follow that same pattern. Okay, a little uncertainty, people get cold feet. Oh my God, I'm just going to lose like everything. And they start not closing real estate transactions, and banks start pulling in, and
What I love about your answer, and I couldn't agree more, is that it has nothing to do with what's actually going on out there. It's just the sentiment of the buyers. The attitude that buyers have for real estate is the most powerful thing in the world. Doesn't matter what the rates are, or employment situation, the economy, war, anything. If buyers feel like it's a good time to buy, they all buy. If they don't,
that's it.
they stay home.
Well, and what's
Mhm.
crazy right now with all the social media and Twitter and YouTube and everybody talking about it, and it being magnified on such a level, it moves so quick now. It's like the market's over and then boom, it stops and shuts down, and everybody's on the same page now. Now appraisers are like running short, and banks are like, cut it down, cut it down, cut it down. Right? Everybody's going,
time to sell. Time to sell. I got to get out. I got to get out.
I don't know if you should buy right now. I don't know what to tell you right now. I don't know if, like, everybody just went
Just
from
wait.
like, go,
Just
go,
wait.
go, go, go. Holy shit, the world.
It's so fun. Yeah.
Well, yeah, like 100%. And it's like, okay, do people stop buying houses? The perma bears, okay, like the bears of the market, they would hope that every single person that ever wanted to buy a house just disappears away forever. The bulls, they want to see it come back in, but real estate is neither bear nor bull. Like real estate, real estate provides something that other investments don't provide. It provides shelter. And so it will always be there, and you need to buy it or rent it. So that's the funny thing now is that we've got we've got this kind of diverging economy happening because no one wants to buy anything. Everyone is scared beyond. But investors, okay, are thinking, wow, you know what is I can buy that place $300,000 cheaper. Yeah, and rent it out for $5,000.
And rents are spiking.
Rents
so
are going crazy.
It's almost the opportune time for an investor to get into the market. Right.
I keep saying, everybody tells me
that'll be
I'm
coming soon. I don't know if
stupid.
it's today, but it's that
It's
opportunity
coming.
will be there.
No, the algorithm are gonna call the bottom for us. Zoocasa is gonna go bananas and just start buying.
Well, see, that's the whole thing is
Zillow,
that
he meant to say.
Zillow.
is the industry or the institutional investors coming in and eating everyone's lunch, and that's whether they where stuff like that. We should probably be lobbying government to get some stuff in place. Okay, like how can this, how can they stop it? But you know how bureaucracy is. It will take 2 or 3 years or 4 years, and by that time the damage is already done, right? So there's just so many parts to it this time because it's just fast moving, and we've had the we've come through COVID.
Yeah, there's layers to this thing right now.
What
that
Yeah.
are, like,
what would you think about corporations,
unbelievable.
any corporation, not being allowed to hold single family homes?
So I think investors, I think that there should be rules against single family homes. End of story. I think single family homes are, they're there for a reason. And if investors really wanted to do something, and I'm talking to my investors now on this, is land assembly. So if they really want to be investors, okay, if that's really what they want to do, then you do like what a lot of the investors that I've worked with for decades now go out and they start to put together a plan and do some land assembly, buy 4 or 5 houses on a block, and then go for rezoning and then build something bigger and better than what was there.
Those
So
guys are the smartest guys on the planet.
they go, I used to
it
sell
takes a
options.
knowledge. Yeah.
I used to, years ago, there were a couple developers and, I was young and bright eyed and bushy tailed. And it was like, gee, Donna, like go out and this is the area that we are looking at. Right. And, you would go out and I'd knock on the door and I'd have coffee and tea with the older people and come back with the option. You sell the options. And, so we just have this, it's stupid. Okay. The investors, oh, I'm just going to go out and buy a single family house and rent it out. That's not an investor. I'm sorry. You're not investing. You are not investing in the economy. You're buying a house and you're renting it out. You're taking advantage of someone who needs a roof over their head. Anyone can do that.
It's
So
interesting
that,
perspective, right? That's a very
Mhm.
interesting perspective, right? Because the sophistication of the land assembler or the, large commercial multifamily apartment owner is much higher than the guy who's buying the condos and renting them out or the single family homes, right? There really
yeah.
isn't much to it. And in fact, your business plan heavily relies on speculation, if not entirely.
Well,
Right.
it is
Yeah.
100%. Well, being an
Not
investor just isn't going to the bank and getting a mortgage to put on a property. Like to me, it doesn't make a lot of economic sense to someone, especially now as we see interest rates going up. Um, and real estate is no longer the only game in town. There's other safer things to do that don't cause you any headaches of the tenant calling and saying that their roof just blew off or their furnace just blew up, blah, blah, blah. And so there's a lot of people who are in the investment circle that really shouldn't be there because guess what? They can't afford to replace that furnace if it blows up.
isn't
They can
it
hardly replace their own.
and isn't it just more efficient anyways from a management and cost perspective to have those 100 units in one building rather than like spread out all over, I don't know, even just an area? Like houses are way more to manage than 100-unit building. You need like one guy in a building.
Well, yeah, like so I have a client right now who 4 or 5 years ago, I came across a property which was large lots and I said to him, you know what, if you got some cash, you should probably jump on this, right? This to me is in an area which could really be intensified, welcome intensification, right? Some good land assembly here. And he's held it and rented it out for 5 years and now it's time to look at intensifying, whether it be townhouses and apartment. And where he thought that he wanted to sell it off at that stage, he's now thinking maybe he'll get some other investors and develop it. So that's how when you speak to these old developers, these old, like in Hamilton, we've got some people who are some developers that from Italy that came in. That's how they started. So the investors who just think it's all about going in and making 100 G notes, buying a Rolex watch, getting a yacht, playing some golf, these guys that I had the privilege of working with, through the bank and then in real estate, I tell you, they should take a look at them because they know how it's done.
Mhm.
It's
Yeah.
not done by just picking up 5 or 6 rentals and then taking the gains off of it. You know, the government wanted to do something they could increase capital gains, which I think is for single family. I think that would be a good move.
Increase capital
Whoa.
gains. Are you talking about the exemption on the principal residence, or are you just talking about capital gains on any
Increase tax.
investor?
Yeah, the capital gains.
On the
Yeah.
primary residence.
Well, not on the primary residence, on investment
Okay,
properties.
just
I
on
think
investment
Oh,
property.
okay.
So
Yeah.
instead of a 50% exception, maybe like 25
70
or something like that. Yeah, so
Well,
75%
that's
tax.
75%. Yeah.
Yeah.
So, but on a certain class, right? So single family homes, that's what they
Right,
get
right.
taxed at.
Okay,
But
yeah,
if
that's interesting.
people actually are taking that and developing it over, now the Canadian Real Estate Association did lobby the government for a long time for that capital gains tax exemption,
Yeah.
where if someone was rolling it over into a larger property, that they would be exempted from it, but the government didn't move on it. And
No.
last I saw, it's off of
The
the
1034 exchange in the States is a good
Yep,
system
precisely.
that they use.
Yeah.
So
Yeah.
actually, you just had a really good point, because it's actually a dilemma that we're dealing with right now. Is now people are in. I'm sure you're dealing with this. They're saying, I don't need to sell. I'll just rent out my house, right? Which now that becomes your investment property because you're moving into whatever stage of life you're going into. And so, any gains that you have on that property now are going to be subject to capital gains, but a deterrent or a incentive for them to sell their single family homes and put them back on the market might be an increase to how much tax they're going to pay on those gains just on
Well,
single family homes.
So that's base. You know what is, I hate to do this, but I have to plug my computer in. Can
problem.
you just exit me out until I get back?
Don't
Okay,
worry,
can you-
just plug your computer in.
Just do
Daryl and I will
your
have a
thing.
great
I
discussion.
just have to
while
go
you're
get
gone.
my
It's okay.
thing. Okay,
No
all
No
right.
problem. No problem. Stay on there. Right, Daryl, think about that. So everyone was saying right now, I don't need to sell. I'm just going to rent. Trust me, every realtor is hearing this right now. And so, okay,
For
no
sure.
problem.
It makes sense.
And if you got to pay tax on that gain, because my house is $1 million, I want it to be worth 1.2. I'll sell when it's worth 1.2 in the future and rent it out today because the rents are high. Well, that $200,000 is subject to capital gains tax. And if the government were to say, hey, well, we're going to tax more on these single family homes, it might free up single family homes for people who actually need it. And they can maybe even incentivize landlords to do more multifamily development, because that's the other issue too, right? Is when you, like yourself, you go and build a purpose-built rental, and then you want to, because you're really good at that, then you want to flip it, you got to pay a lot of tax. Maybe we can give those guys a break for creating more rentals. We're solving problems over here, Donna.
I could hear you, but
I get it. But it's
but,
not happening now. So the problem will persist for how long?
well, I think it's something that which the Canadian Real Estate Association is the group that would be lobbying for that, and they have a lot of pull, I would say, with the federal government, and the housing minister, both provincially and federally. This is something that has to get politicians' ears, as that this is a way around it. This is a way that you can preserve the single family homes, make some tax money, and protect people. Because, face it, if interest rates are decent, right? And I think we all agree, 0% interest or 1% interest does no good to anyone, except
I'll be happy when I have to refi my house if they're around that rate.
Yeah. Yeah. Well, like, just from old school business, and I know a lot of people will say, you've got to leverage everything that you have. But the masters I learned from is you don't touch your personal residence. You make money off of those, you pay down your personal residence, and you protect your personal residence away. Now the banks, with all their creative funding models, they've got your firstborn, your lastborn.
How many lines of credits do you
I
want?
learned that the hard way in 2008 or 2009. I got creamed, and the guy that lent me the money had everything tied to everything, like 3 houses tied together, including our house. It was a real mess.
So, I have a couple of young guys that are doing a reno on a house. And I didn't sell them the house, but so they purchased this house and the funding was private. Okay. So
Right.
apparently that private guy
14% private.
no, it was relatively inexpensive. I think it was only like 5% or whatever, right?
Wow.
So it was inexpensive, but that guy just got sued.
Oh.
And now he's suing them.
Ooh.
Okay. And they're not finished with this property yet. And there's litigation against.
He's recalling the mortgage.
What's that?
He's recalling the mortgage, right? He needs the money, so he's recalling the mortgage.
Well, he didn't have a mortgage on the property. He had a promissory note or whatever.
Oh,
so
okay.
Anyhow, so it's a complete mess.
Disaster.
And yeah, so yeah, the whole thing.
Donna to the rescue, right? They come to you, Donna, solve my problems. How do I fix this, right?
Well, I just said, hey, you know what is you've got to get
finish the house.
Finish the house and
I put up
2 years. The guy paid back.
Yeah, I put up a tweet last week while I took my wife for our anniversary to Niagara on the Lake, and as we're walking around, I'm seeing all these unfinished construction projects, and I tweet out like, I feel really sorry for the poor schmucks that are building those houses right now, especially the ones with for sale signs on them, because they know they're gonna get killed right now. Like if you're halfway done or you're framing and it's for sale in this environment, like you're desperate to get that thing sold as
something's
quick
up.
as you can.
So the funny thing is that, I see all sorts of tweets, because people do hate realtors, and it's like, you're going to starve. They're not going to starve. Okay. Because a lot of realtors have, other spouses that work and stuff like that. They're going to have nervous breakdowns. So back in the 90s, we didn't have agents that starved to death. Every single agent that we called, they were just getting over from they were either, had an emotional breakdown or had just been diagnosed with bipolar. It was like crazy. It was like, are we the last surviving people here? Like the ones that made it through those 90s. But the emotional turmoil that a realtor faces by being involved with the financial collapse of people and having collected a commission check, whether it be, family, friends, someone who was referred to you, it can be devastating.
Yeah.
So,
I have a question for you that we've answered a few times on the show when it was a hot topic, but it definitely, no one's talking about it anymore. Do we have a housing supply issue in Canada?
So the housing supply issue, there is definitely a housing supply issue. Otherwise, we wouldn't have homeless people sleeping on the street. There's the issue on housing is very multifaceted, right? So, when you get into lower income, I mean, you're talking about poverty, scrambling, couch surfing, shelters. The government is not doing enough to look after this, the people in our society that are hurting the most, whether it's substance abuse, whatever, that's not being dealt with. As far as affordable housing is concerned, that gets conflated. So when the government talks about affordable housing, that's who they're talking about are for the, people who would be in social housing. When realtors talk about affordable housing, I'm talking about, my young couple making $100,000 a year, finding them something affordable to live in the city.
They can afford, God damn it. Right?
Yeah. So, and I've been preaching this. I've been involved in organized real estate for a decade now, and I've been preaching it over and over. We got to get this separated, right? Like the government has hijacked our affordability. So we're saying, like we want, like we're looking for places that are affordable, nice townhouse complexes, you know, stop building stacked units and, you know, stacked 2-bedroom units, because families want to live in a nice 3-bedroom townhouse, right? Like get these built. So that's what we consider affordable.
Why
And
can't we
sometimes,
have like the smaller lots with the smaller houses again, like the wartime style, 2 bedrooms, 1 floor, roof, boom, done.
14-foot lots.
well,
Oh no,
so
they were on decent lots, but like we don't need 125 deep if we have one of those little bungalows on that. We need like 80 feet deep.
so the NIMBYism, right, is like huge, but it's also a lack of creativity, I would say, on behalf of this behalf of small investors. So they, I really wish they would take a look at the playbook from some of the older developers who are probably 80, 90 years old now. So for example, in the city of Hamilton, we have the wartime area. Yeah, they're all affordable houses, but some land assembly in there, pulling together those 50 by 150-foot lots, it wouldn't take much land assembly to have some really nice, nice new townhouse units in there.
Mhm.
People just aren't, it's like this froth. Oh, give me single family, give me single family. I'm gonna like build like 3 units here. You know, like they're looking at it, they're not looking at the big picture of actually creating something which will last going down going into the future. So those wartime houses, a house only lives from the time it was built 25 years. That's how come they used to say, you know, 25-year mortgages, because if you didn't do anything to a house, it would just be, you know, you'd have to
A
kind of
shell.
rebuild it. Yeah,
Yeah.
you'd have to rebuild it in 25 years. So these houses, they weren't built with the best of materials when they were built. They were often built by the husband, wife, and kids, or whoever was at home when they picked up the kits. Some of them aren't on foundations, some are. So those areas are ripe, I would say, for this land assembly and redevelopment, would be supported by the community. And sure, it takes away the opportunity for, you know, someone to get into that cheaper single family home, but you know, that's just the
Creates 4
nature
or
of the,
5 of them. Yeah.
Well, but
well,
this
I
is
create,
what
yeah.
But this is the issue that, at least from a developer standpoint, that I face is that, I mean, we have to find the highest and best use to even get to that minimum margin that anybody will invest in and anyone will finance, right? So
Mhm.
so when you're buying overpriced land that's available because there's nothing else available, or people are pretty smart these days. It's really hard to steal a deal from someone. Like you can't build these great creative single family little things because they don't make economic sense based on the planning that's allowed there, right? So in the areas where people want to live, they want density, the city. So the seller wants a price based on max density. So you can't go in there and build a cute little townhouse project when somebody else is looking at it as a 12-story mid-rise building.
So, so back in the late 70s or mid 70s, there was a housing crisis back then, and there was a huge inflation crisis. And the Ontario Realty Corp owned land, and it was decided that they would take that land and they would get together with developers, and they would get the developers to put proposals to build on this land, single family homes. Sometimes there were semis. There were some were townhouses, but they built and then they formed land leases for the land. And those land leases, they didn't, they were like 99-year leases or whatever, very, very affordable. And it took the land price component away from the value of the property. So one thing is that when those houses sold substantially cheaper, So because that land component wasn't in there. And the government has everything within its power right now to go into areas, to identify areas. But first of all, you have to have people who are who have the capabilities of identifying these areas, to identify the areas, expropriate the land. I know that's a
I like it.
bad, well, people don't like that term, but expropriate the land, pay the people fair market value, and then make the investment into housing, because that's the only way it's going to get done.
That's a really strong, opinionated type of proposal. But I definitely
No, it's the right
agree
way to
with you
go,
that in the
yeah.
future, does the government have any choice other than to find the highest and best use for all the land that they have? Isn't that the responsibility of the municipal and provincial governments, is to make sure
No,
that people have
no.
housing?
Yeah, but that's
Yeah.
not highest and best use necessarily. If they've owned the land for 100 years,
I'm not saying that.
they
I'm
should
maybe,
have
maybe they
to
could sell it. Maybe
donate
they
the
could
land.
force land assemblies,
Well,
Daryl, and then have the
yeah,
developers bring in their proposal at those prices. People get premiums, and because Daryl and I work on this all the time with land assemblies and dealing with sellers, and they're never
that-
realistic and they're impossible to put together. And people just are greedy and they think the developers are getting rich and they don't want to sell.
I just don't know why they don't just hire a really good young developer, pay them a lot of money to just develop all the stuff that they own already to the maximum density that's allowable, and put it on the market for that discount with no land included at
yeah,
cost.
so as far as land assembly, I think that that approach of going out and trying to assemble it on your own, it's I think a method behind the madness of the way that I learned of land assembly, and that was sending the scouts out. Okay, sending the scouts out to areas, and selecting people who would match with the demographics of who what area you're looking at. So, if you're sending it out to farmers, but in farmers or business people, it's that knowing. Okay, but it all starts with acquiring a few properties there. So some companies, they have it right in their their records or their mandate or whatever, to, if a property comes up within a certain radius, to acquire it. So these aren't overnight, and that's another thing with investors today. They're so impatient. And unfortunately, over the past 2 years, they've been like cashing in 100 G notes like every few months, right? But it's patience. These things take a long time, like years and decades.
Mhm.
And developers here in Hamilton, there's developers that bought this property 40 years ago. Okay, he's bought some property, waiting for that development time. So these are long plays, these are long holds, and and they're certainly not out there partying on their yachts and partying, like I say, with drenched in gold or their Rolexes or whatever. They very, very low key. So land assembly for the city is much easier because the city can identify areas that are underperforming for housing. So how many people per hectare, what the density is per hectare, and just say, you know what, sorry, but we need more. Like, this is our thing, is that the properties within this block, you can sell it to us right now, or we're giving you notification that we will be expropriating it within 3 years or 4 years, whatever.
Mhm.
And the same as what they did for the LRT lines, right? You can deal with us now, or you can wait until we expropriate you, and you never know what the prices are going to be.
Yeah.
So,
The
you know,
Pickering
they,
Airport, I mean, 40, 50 years ago, they did that and they've been sitting on it since, right?
Mhm.
And everybody's still there land leasing the farmland and stuff like that. There's lots of
Yeah.
big scale projects that they did for the greater good, right?
Yeah.
And so
Yeah.
they
And it
have the
seems,
knowledge and the power to do it.
It's just
and
been a
see the thing,
while since they've done it.
The LRT, Donna was just mentioning the LRT.
yeah,
And
the
right
LRT,
now, actually, the Ontario line too. The Ontario line is also
But they're
got expropriation.
expropriating for those for stops, not putting land assemblies together to add density. They're putting
Still,
uh,
Yeah.
Well,
but there's
it's
still
not quite
expropriation
the
happening
same.
on for the greater good.
But you do have investors, okay, investors along the LRT line. And I
Right.
think Waterloo is a great example. You know, Waterloo, they had a huge surge of land assemblies and great projects that they got off the ground, right? Like with their LRT. Like
Well,
it
knowing that
forever
it was
changed.
coming, right? I
Yeah,
think
yeah.
that's the key, is that these older developers know some politicians or have some information about where these things are about to transpire, or even if it's 10, 15
Or they
years down
guide
the
them
road.
towards their site.
Well, or it's like, yeah, you know, like I bought this site over in the Portlands. We could really use a subway over here. We'll
Yeah.
build it for you.
Yeah.
Well, you know, so people involved in communities, like I think a lot of investors are spread out too far, right? Like it's like they're like all over the place. And because every municipality has its own idiosyncrasies and it's playing its own at its own party. So the the time spent to watch committee of adjustment hearings and to watch planning committee hearings and to
Yeah.
watch that go to, what are people saying? It takes an effort on behalf of an investor, okay? But what they have to realize is the developers, the guys who are the big developers, they do it all the time. They do it all the time. They make time to know their area, to know their product, to know the movers and shakers. They know who's weak, who they're going to get an appointment with. They have it. And I don't think investors today, the young crowd, like I say, they've just been out buying single family homes and slapping in apartments, illegal apartments, and what they're buying. And yeah, so they,
Well,
That's a
we're
good,
buying
they,
good
future
observation.
contracts on condos, right? They're buying and
Yeah,
Mhm.
the
flip
condo market
assignment.
is unfortunately the most vulnerable investors, right? These are the people with the least amount of sophistication, the least amount of knowledge and experience, and that they're going into these condos.
Least amount of
Pre-construction,
risk,
obviously, a
too.
lot of them,
Least
highest amount of risk.
Why? They're walking away from maybe 80 grand if the deal doesn't go
Oh, I
through.
see what you mean. So either the initial deposit.
Yeah.
Well, I mean, you could have an even smaller deposit on a resale, right?
Right. Well, I guess
Yeah.
that's true.
I think the higher amount of risk on just the like the turmoil in the market, right?
So the thing is that anytime at all that you're getting into investing in a rental property, single family rental, you need to have some money behind you. I knew him before he got married. His investment, he had 2 condos, and this was back in 2000, 2012, I think it was. Anyhow, his one guy stopped paying rent. And, after 6 or 7 months of trying to get rid of this guy, first it was 3 months where he was just working with him. So he let him go for those 3 months because he was, the guy was down in his luck or whatever. And he didn't give him the proper forms. So as it turned out, it ended up the guy lost his job. Okay. He was ended up behind on that mortgage on that place, behind on the mortgage on his own house. It cost him his marriage. It's,
because the guy didn't
well,
pay for 3 months.
well, he ended up not paying for 7 months. The guy had to get the sheriff in
Yeah.
finally to get him. But that time, 6 months of financial stress,
Yeah.
that's like living in hell for a few years, right?
Oh yeah.
Especially the young kids at home and wife, and then lose your job on top of it.
Yeah.
So
and those stories are out there still today.
oh yeah. So
is anything happening right now that's going to fix this? Like, even if prices drop to whatever the barest bear of the bears thinks it's going to go to, like, then what?
well, it's really going to be in the banks, I think this is in the banks.
Well, they like money,
right
don't
now.
they? They like making money.
Okay, but seriously, we go along. You had just said it earlier. For some reason, the bank was right in there at the party. They were bringing the booze and the popcorn. Everyone was good.
It was,
Okay.
yeah, they were throwing the party.
Osby, okay, was on vacation down in the islands. You know, no one was around watching any of this going on,
Mhm.
but it was record breaking. It's like, and these people aren't dumb. They're like quadruple MBAs and PhDs and
Yeah.
everything that are working in these departments.
Yeah. Let's see
So,
what will happen. Just let it go a little
We'll
longer.
put a little reserves on
Let's
the
see what
side because we know some
happens.
people will fail, and we'll
yeah.
cover our losses. Yeah.
So it's, you know, and it's unusual that the real estate community is sitting back and saying, you know, like, do we really need more booze here? Like, you know, like this is, does anyone notice that
But
we're
that's
being
what I
really
was
bad?
saying. It's the
Yeah.
only industry where all the salespeople were going like, hello, I don't think
I
this
know.
is healthy for any of us. I don't want
Yeah.
to sell anything
I don't want to. I don't
anymore.
want to make any more money. This
I don't
is
want to
enough.
do
Yeah.
this.
Please.
Yeah.
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 But no
So,
one listened.
yeah, but they just let it. And like I said, an OSFI who, you know, remember back years when OSFI came out with the whole stress test, well, it's here to protect you because, you know, we don't want people using their houses as ATM machines. And it's like
No.
OSFI, you know, talk about ATM machines. We're stocking ours with $100,000 bills, right? Like, so what was happening? You know, is it real? So I think if you take a look at where we were, okay, and the market was heating up, we were starting to have an inventory issue in the fall of 2019. Inventory started to go down. And a lot of us were saying, okay, this is really feeling eerily like 2017, right? You know, because we're back, you know, in multiple offers and prices seem to be ticking up. And that was pre-COVID. And then when COVID hit and the stimulus, and it was like, well, real estate seems to be the only thing that people can go out and do. So that was the excuse. And
But that was
when
after a period of everybody going, hold on a sec, the world is going to end. Don't do anything right now, right?
Mm-hmm.
that's right. And then it was the, you know, after those lockdowns, that's when the fleeing started to happen out of places like Toronto. And the the general feeling is that the market was going to end up on a good note for 2020 regardless. So I think it wouldn't have been unusual to see that market go up 10%, 15% in 2020, and then another 5% in 2021, another 5 or 6% in 2021, if all things being normal, if we didn't have the supply chain issues that we're faced with. So the market should probably be up 20% from 2019, right? Like if with all things being equal.
Yep.
Unfortunately, we were up 60%, which was like,
Yeah.
you know,
More
and
in some of these communities, right? But we're starting to see that balance out, and I think that's what I would be most focused on right now is looking at the last 3, 4, 5 years of data and saying where should we be today based on everything that we know, because the last definitely, you know, beginning of 2022 made absolutely no sense, and that data should just be erased from memory. And some of the things that even happened in 2021 are going to be hard to justify later on as well.
But people get erased with that memory, right? Like, and there's so many layers that had to happen, from realtor to appraiser to mortgage broker to banker to the people that were making the purchase and the people even selling the home. Everybody knew it was fucking bananas and crazy. Like, okay, like let's just imagine those people that went to Bancroft that forced Bancroft's average price up 95% over 2 years. All the people that were in the chain that had to make that actually happen. And nobody said, hang on a sec, like Bancroft can't be worth 95% more than it was 2 years ago. Hold on, like let's think this through. But no, everybody was like, get a fucking house, get a fucking house, get a house. Everybody get a house, get a house.
yeah, get a house quick. And so, you know, to that point, Darryl, is that I grew up in this small farming community out by Lake Erie, very small, very hick. Okay. And one of my buddies, his family had a farm very close to downtown, which is like four corners in Fisherville. And they built like Held Acres or something out there, right? So a colleague he was telling me about a sale that they had in Fisherville. They said, "Oh, I was out in your hometown." And I said, "Oh, really?" I said, "What were you selling?" They said, "Oh, you know what? Is it beautiful house, 1.1 million." I just about, I said, "What
Was
are
it the
you
entire
talking about?"
downtown block?
I said, "Like, what did you sell?" So they showed me a picture, and it's a beautiful house, right? But 1.1 million in Fisherville. I said, "Do you know where you are? Like, this is Fisherville. You're on well and cistern or well and septic or cistern and septic and you know, at least 45 minutes to the city. And it's not only 45 minutes to the city, you're a half an hour to the closest small town that has anything, right? Like it's you know where Fisherville is, you're half an hour to Dunnville, you're almost an hour to Hamilton, almost an hour to Simcoe. So it's like this is 1.1 million in the middle of nowhere. So and that's where you take a look and you know the land costs. And I know that land, okay, did not cost that builder a tremendous amount of money. So, you know, it's dirt cheap, and it's not even great great value for farmland because it's really heavy clay. So the land value is just not there to justify a $1.1 million house, especially when you
The
consider.
argument is, and so we had somebody on from Saskatchewan.
Mhm.
Okay. Saskatchewan has houses that are $300,000, and
Lots of
Saskatchewan
them.
has new construction houses that are $500,000 or $600,000. And we're like, how is this possible? Like, what is the difference between building in Saskatchewan and Ontario? Because even if you got the land for free, you're not getting a house for 600,000 in Ontario, right?
It's a philosophy, but it's a philosophy. I spoke to a counselor in Hamilton, and it was to do with upzoning parcels of land, right? And I said, you realize that the minute that you allow an upzoning, so you know the planners come out, they say the official plan, this is how many, you know, we want a 14-story building here. Like they've got a vision, they've got a plan. But the minute that council bends and says, okay, you know what is, yeah, Billy, you can build a 20-foot tower or 20-story tower there, that automatically increases the value of the land right beside it. It's like shoots it up. So, and even though that may be zoned for less, that the inability of councillors in different urban centers to stay true and to support their planning staff, I think is a big issue. And that causes the speculation and escalation of the property values.
It's so simple.
Daryl's
I mean,
been talking about that.
yeah, they've made rules, they've made guidelines. It's like, but they don't see the problem is not only do the developers push for more than what's allowed, the planners also push for less than what's allowed. And everybody's got an opinion.
Mhm.
So it's like the whole thing is a bloody just stupidity. But if they would just say, hey, here's the book, here's the rules, there you go. Now land values are fixed based on whatever land value is, but everybody knows what you can do on the property now, right?
Yeah,
So that
yeah.
that fixes land costs to whatever the market says a square foot is worth in this area, right? It's not now, okay, we think that it's worth $40 a square foot, but you think it's got 200,000 square feet, and I think it's got 150,000 square feet. So now what the hell does the square foot price have to do with anything? And like it's all random. And now the guy who gets it is generally the guy who paid the most, right? And you believe will close, but realistically, it's the guy who pays the most. So what does that guy have to do? He has to get the most on the property to turn a profit, right?
100%,
And
100%,
and so
right?
we go down the spiral, right?
All the time, right? And then that radiates out from that property into other properties, and you know, The rest is, people holding on to properties for 20 years, land banking. And the difference, a colleague of mine has relatives in Chicago and said, when they first went to Chicago, they thought, oh my gosh, and they started to buy up all sorts of places right in Chicago because the price was like so insanely good. And then they realized that, 5 years down the road, the prices were still the same, that there was no appreciation. And, you get into a market like the GTA, GTHA is an anomaly. Like, are we just all insane? Have we created this huge Ponzi scheme out here in New Brunswick, for example, where I'll be back in Ontario later this week. So it's the difference of night and day. Out here in New Brunswick, someone pulls up, they've got a backhoe, they start building, right? Approvals are given out. Property value is, how much do you want for that field? 20,000, here you go. So it's not the same mentality, the same Ponzi scheming type of thing.
Demand.
And
There
actually,
isn't the same demand.
well, I don't know. There's a huge demand for properties out here.
Really?
Huge demand. Yeah.
Buyers are
Really?
conditioned to pay more. So when Daryl and I looked at a property this morning and I sent it to him, and the guy paid $2 million in 2018. And why did we both bring that up right off the bat? Because we're conditioned to think it's been 4 years, it must be worth more. And that's that Toronto mentality, where in other places they wouldn't care. I don't care what you paid. What else is in the market right now? What can I do with the land? Where am I going to go? And I think that that's the difference in the GTA market, is that we're conditioned that there's a time spectrum, and the further along you are on that time spectrum, the more the property is worth, no matter what.
Oh,
and
that the owner will
deleted.
Expect more.
And
Not
they,
even that
and
it's
the owner
worth
will
more.
expect more.
Right.
Well, good point. That the owner would expect more, and that there would be some sort of justification for them to get more. And so that's got to be conditioned out. And hopefully this generation that's coming up now will get the right information, because
but somebody has to get hurt for that to get conditioned out, right? So when
welcome
we look
to the
at
90s.
Right.
Welcome
right.
to the 90s.
Yeah, exactly.
Welcome to the 90s.
And that's
the 90s is like, oh my gosh, I finally have broken even. Well, how long you lived here? 8 years. Okay. Yeah. Time to sell.
Time to sell.
Yeah.
Right?
Thanks for stopping by. Sometimes we felt so bad for clients, right? It was like terrible. So
but do the markets still work the way that do they work now the way that they did then in the 80s? Isn't money faster and things faster and closing? Don't things just move faster now than they did in the 80s, and bigger spikes up and down, more liquid?
I think the social media experts, okay, I think that and it's it's like golfing or like anything, right? A person go out and have a good game, okay, just out of a real fluke. I've played in tournaments where I haven't missed a single shot. I'm a crappy golfer, okay, and people will say, hey, do you want to join the league? Yeah, you know what? Don't be fooled by my performance there. So it's the performance in real estate, a lot of people, investments, you haven't been able to miss the target,
right?
It's been so
yeah
huge.
you're not that special because you made money in real estate over the last little while.
That's what one of my mentors said, is that the market made us geniuses.
Oh yeah. And that's going to be the hard part, right?
Yeah,
I make a lot of people not geniuses in the next couple of years.
I hope that people invest in knowledge so that they can be real estate investors instead of just relying on dumb luck, right?
Well, there's definitely a great opportunity coming down the pipe for people with cash ready to go.
Well, I think anything that you do in life, you should be looking to make things better than what you found them. Make things better than, whether you're making someone's life better. I have an investor who he just feels good renting out at below market. Okay. He feels good providing good, affordable housing, okay, to people. He's not looking to make, like a 10% cap rate. So these things fit in. I've got other ones that are just sharks. It's okay. Like, show me how I'm going to make $1 million in a year. So people have to, when they're investing, understand is real estate investing for you, right? What level of real estate investing do you want to do? Do you want to deal with people's housing needs, or do you want to be creating something, for the whole land assembly, that type of thing, or like, which one do you want to do? And because it's all needed. And there's a lot of like shows like this, I think, are very important for young investors, or for any investor to kind of get their feet on the ground, right? To take a look at things and understand that how important real estate investing is, that there's opportunities, but nothing comes free unless you're in the two COVID years. So
well, your last statement could not be more than true. Shows like this are very important. And we're really happy. We're really happy today because we're actually at the end of the show.
Oh, okay.
But
great.
we're really happy to have you on. I'm hoping we can get you back in the future.
But mission accomplished. You definitely left this place better than it was when it started.
Exactly.
Well done. Thank you.
We want to kind of just make sure people know where to find you, Donna. So just where can people find you if they're looking to get in contact with you?
I'm Love Your Home on Twitter, and just my name at myname.ca, Donna Bacher at donnabacher.ca.
Perfect. We'll post that in the description.
Yeah. If you Google me, I'm around enough that you can hunt me down. So
I could tell from your tweets that you would be a fountain of insight.
Hey, listen, this gray hair came very naturally. Okay. The wrinkles on top of it. I'm going to a gathering on the weekend, which is a bunch of old time realtors. So nice. I'm really interested to see what the thoughts are, right? Like, because we do touch base periodically, and it's like, can you believe it?
Mm-hmm.
Right.
Gosh, I mix my vodka with my hair dye. Anyhow, so thank you so much, guys.
Thanks, Donna.
Thank you.
All right.
That was great.
Okay.
Awesome.
All right. I'll sign off. Bye.